Hey folks, this is Ariel Baruch out of Sierra Cast TV studio in central New Jersey. And today I want to talk about qualifying documents for specifically for home purchases. What I realized by working with different clients is that many times when you work with somebody, it's almost like almost get to the point where people really have to disclose everything. They have to essentially disclose their tax returns, all the documents, copy of the driver license, social security card, pay stubs, multiple pay stubs, typically pay stubs for the 30 days and so on, and tax returns and all the tax return schedules and a bunch of other things. So I want to go briefly over the list so you have realistic expectations what is really expected. This whole thing, the list is really kind of give you an idea that all of what banks typically ask is really to prove that the person can pay the loan, because many loans are 15-year loans, 30-year loans, and the bank want to make sure that if somebody borrows the money, the person really has ability to pay the loan. So-called ATR, they follow the so-called ATR rule, ability to repay loan. So it's in all of this, you can see if you look from that point of view, like can that person pay this loan over a longer period of time, you will understand why they ask for tax returns for the last 2 years, for example, for people who are self-employed, or why they ask for last 2 years of W-2s for people who are employed for another business, or people who have with a multiple streams of income. For example, they may have a W-2, but then they also have some other streams of income. The bank will ask for those different streams of income, and then the bank will average those numbers over the last 2 years, and then they will also ask for proof that the business is still up and running, especially for people who have let's say they have their own business, they have the hair salon, or maybe they have a pizza business, or they have a restaurant. The bank, we are in a COVID-19 era, 2020, and the banks want to make sure the business is up and operational, and people really have income to pay for the loan. So the list, the list is the list, but you can see if you look from a bank point of view, you will understand why they ask for it. And this list is really for qualifying mortgages, the mortgages that follow certain guidelines where the banks feel confident they can not only they can underwrite the loan, but they can also sell this loan to other companies that specialize in buying those loans, and or when loans get packaged into mortgage-backed securities and sold on the secondary market. So the first thing is obviously ID and the social security card. The second thing is the pay stubs. Typically for the pay stubs, you want to cover 30 days. So if somebody gets paid weekly, it would have to be 4 or 5 pay stubs. If somebody gets paid twice a month, it would have to be 2 or 3 pay stubs. And typically the closer people get to the closing date, so-called loan closing date, then the bank may ask for another copy, which is understandable. The bank want to make sure the person's still employed. They're not going to lend money to somebody who just got laid off, because it's a risk. The person, there's a good probability the person may be not able to pay for mortgage, or may require forbearance, and banks really don't want to do this. Banks want to make sure if they lend the money, a person can pay for it, at least in the foreseeable future. Obviously nobody knows the future, but the bank expects the person to pay the loan for the next 12 months at the very least. So that's this whole idea behind this list is really like, can this person pay for the next 12 months? And that's why, especially now in the era of COVID-19, in the year 2020, bank want to make sure if somebody says they have a business, the business is operational, the cash is flowing, and most importantly, people are able to pay for the loan. So the next thing is 2-year work history. Again, why and gaps in employment need to be explained, and why does bank ask for it is because from statistically they know if for the last 2 years before the loan is issued, if the person had issues, gaps in employment, or was unemployed, that increases the risk of the loan. They may still give the loan, but they may increase the interest rate for the loan to offset the risk that borrower can represents. So that's why they ask for 2 years of work history and explanation of gaps in employment. Then the assets, what are the assets? How a person is going to pay for the closing costs and down payment? Is it any part of that is going to be given as a gift by, let's say, relative, parent or sibling or grandparent, or maybe even employer can contribute to to employee to help buy the home. Some employers are employers are willing to do this. So the gift needs to be explained. It has to be it has to be clear where the money came from. The bank will require traceability. So most banks, that's my understanding, banks will not accept cash on closing date. It really has to be traceable. It has to be in a bank account somewhere. Maybe it was transferred from retirement account or 401k account to the savings account or cash account, but it has to be traceable. Like a bank will want to know where the money came from. Even if it's a gift, the bank will probably ask for a bank statement where the money came from, bank statement where the money came from, and a bank statement where the money was deposited, for example, in a borrower's account. So the bank will ask for W-2s and 1040s. So typically for people who are employed, it may be just W-2 forms, which is essentially people employed. This is the income they rely on to qualify for the loan. The bank may not even ask for tax return in a case where somebody just relies specifically on a W-2 income. They employed, let's say they work for one company, could be more than one company, but the bank will say, okay, well, give us W-2s for the last 2 years. If somebody is a business owner, has LLC, or part of that income that the person want to rely on to qualify for the mortgage is business income and has variability in income, goes ups and down, maybe have some seasonal variability, the bank will want to see tax returns. So 1040 tax returns, typically 2 years. So the bank want to see last 2 years of tax returns, so the bank can accurately estimate what the income is from the business. It could be any business, could be consulting business, pizza business, store, brick and mortar store, online store, any kind of business. The bank want to see what is the average income for the last 2 years, and the bank will also want to see that the business is still open, operational, and there's a cash flow that supports the income that the person had on last 2 years of tax returns. Business tax returns. So again, if person relies on a business to qualify for the mortgage, they will have to show business tax returns, not only personal but also business. If it's a pass-through, if person file taxes essentially pass through, so it's a personal tax return, but it has all these schedules for the business, then that's fine. The bank will want to see it. Credit letter of explanation. So if there are certain things that show up on the credit and the bank has questions, like why, bank may have questions, those questions have to be answered. So the bank typically will print out the form where they will have certain questions about certain discrepancies or issues that they found on a tri-merge credit report, and the borrower will have to just explain. For example, if the borrower moved from place A to place B, and then there was some late payments for some, let's say, student loan, they didn't get the student loan statement in time, and they didn't pay the payment on time, the borrower will have to explain that they moved from place A to place B, and there was a lost mail, they did not get the bill on time, and that's why they had a late payment. Things like this, basic stuff that the lender really need this essentially for the check mark. They want to make sure this is one of the things that it's has to be done. The borrower has to explain certain things if the lender has questions about the credit history. Okay, so other things that have to be submitted: credit report for all borrowers. So the bank will use tri-merge reports. They will contact 3 major credit agencies and create tri-merge report for each borrower who is on a loan. Credit card authorization or form of payment for the appraisal. Appraisal typically done when the borrower says, yes, I want to proceed with this purchase. The bank will say, okay, well, we need funds to pay for the appraisal. The appraiser will come out, check the home, make sure home is fine, make sure home value is at or above what the loan amount will be. Otherwise, the borrower will have to pay for the difference. So that's one of the reasons why appraisal is done, is to make sure that when the lender lends the money, the property is worth it. Explanation of any derogatory credit within the last 24 months, provide documentations if required, if applicable, and some other things. There may be some cooperatives or condos questionnaires that may need to be explained. There may be some forms that they need to be obtained from condominium association. For example, if there are common grounds, who maintain the common grounds in the case of the loan default. There are some certain papers that has to be addressed. Okay, so detailed source of funds to close, so there has to be traceability where money came from to close the loan. The funds to close typically include down payment plus the whatever is needed to pay for the closing costs. The contract of sale obviously has to be signed, executed contract of sale, and some other things. So this list of qualifying documents, this is a basic list I'm showing you here, but those are the most common ones that have to be provided, and the borrower just need to be ready to provide those documents. And some things will need to be, the lender will ask multiple times. For example, pay stubs. If the loan closure delayed by a month or several weeks, the lender may ask for additional pay stub or some other paperwork. Okay, so just keep this in mind. It's pretty straightforward. The goal here is really to prove that the borrower can pay the loan, because most loans are 15 to 30-year loans. So the bank want to make sure that the borrower is capable of paying the loan for foreseeable future. Typically, for the expectation is that the borrower will be able to pay for the loan for the next 12 months. Okay, if you have any questions, feel free to reach out to me directly. My phone number is 609-222-1222. Again, 609-222-1222. Call, send text message, or leave a voicemail. You can also reach out to the office I'm affiliated with. It's a Contour Mortgage out of Robbinsville, New Jersey. You can find it on Google Maps. Feel free to comment below. Let us know the questions you may have. We'll be more than happy to answer those questions. We'll be happy to research a new topic for you and make another video for you. Okay? Thank you for your attention. Have a good day. Bye.